Good evening, everyone. What if I told you that 770 million in traditional Wall Street money has already moved on chain? I'm not talking about some crypto startup fantasy. I'm talking about real institutional clients, real partnerships with State Street, JPMorgan, and real regulatory clearance that's already happening. I'm going to break down institutional grade infrastructure that Ondo Finance is quietly building to tokenize traditional finance and some hidden details that could change everything about how Wall Street truly operates. Let's start with what everyone might be missing. Ondo Finance flagship OUSG product, they're tokenizing Treasury funds. It now holds 770 million in assets. Every single dollar was invested by institutional clients, no retail crypto traders. These are pension funds, insurance companies, corporate treasuries who want 24/7 liquidity without giving up their boring, safe treasury yields. The product isn't just theoretical anymore. They've implemented instant mints and redemptions across four major blockchains: Ripple's XRP, of course, Ethereum, Solana, and Polygon. Think about that. Traditional money market funds that can access during the weekend or holidays, but tokenized treasuries that settle in minutes, anytime. Here's why that matters. While other tokenized asset platforms struggle with maybe fake partnerships, Ondo's clients are actually using this real cash management. They're not waiting for 2027, they're doing it right now. Ondo has achieved real institutional adoption, 770 million and plus in assets. While competitors are still theoretical, 24/7 settlement capability is solving an actual pain point for institutional cash management. Okay, let me show you what real institutional adoption looks like. State Street, we're talking about a $33 trillion asset manager here, partnered with Galaxy Digital to create something called the Sweep Fund. State Street handles the cash management. Galaxy provides the tokenization technology through their digital infrastructure. But here's what no one's talking about. Ondo Finance is seeding this fund with 200 million of actual investment. This isn't theory, it's not a pilot. This is State Street's decade treasury management expertise combined with Galaxy's blockchain infrastructure backed by Ondo's real money. The fund will use PYUSD for instant settlement. Think T-bill yields with instant liquidity 24/7. The target launch is early 2026 on Solana, with Ethereum and Stellar coming later. State Street is literally tokenizing traditional money market funds, and they're using Ondo's platform to do it. It's happening right now. State Street chose Ondo Finance over other tokenization platforms. $200 million in seed investment proves Ondo has real institutional confidence, not just partnerships. The most powerful bank in America just proved that tokenized securities can trade seamlessly between private banking networks and public blockchains. JPMorgan's Kinesis platform, their blockchain division, is not theoretical, it's live and operating. Just completed cross-chain settlement using Ondo Finance tokenized treasury fund. They moved assets from JPMorgan's private banking networks to public chains using Chainlink's Oracle networks. This wasn't a test in some sandbox. This was live transactions that proves that you can have security of private banking networks combined with 24/7 liquidity of blockchain rails. Think about what this means. JPMorgan is showing its institutional clients that they can access blockchain benefits without giving up traditional banking security. They chose Ondo's finance infrastructure to demonstrate that. The implication is that every major bank is going to need that capability going forward. Mastercard isn't new to blockchain. They've built something called multi-token network, a private blockchain that connects major banks, institutions for settlement. Ondo Finance is the first and only real-world asset provider that they've integrated. This means that institutional clients want to use Ondo's tokenized treasuries for payment, settlement. They can do it on Mastercard's proven blockchain infrastructure, not some experimental network. Mastercard's institutional grade private blockchain that runs 24/7. What makes this special is that Mastercard's network processes actual money movement. When banks and payment companies need to move tokenized securities as payment, they can now use Ondo's products on Mastercard's rails. This isn't about retail crypto, this is about institutional settlement infrastructure. Here's what separates real institutional platforms from the startups. When you tokenize 100 plus different securities like Ondo, you need institutional grade data feeds for every single one. We're talking about real-time pricing for Apple, Google, every ETF, every international stock. Ondo could have built their own systems. Instead, they went to Chainlink, the same data infrastructure that secures over 14 billion in DeFi protocols. Every tokenized security on Ondo's platform gets price updates from Chainlink's decentralized Oracle network. Why does this matter? Because institutional clients won't trust tokenized assets that could get stuck with wrong pricing during volatile markets. Chainlink's infrastructure means Ondo's products can't be hacked or manipulated by bad price feeds. It's the level of data security that most crypto projects don't even know that they need. Ondo's Finance built Flux Finance. It's the only DeFi protocol that lets you use tokenized treasury funds as collateral for borrowing. Think about this. You can hold 10 million in OUSG tokens, earn 3.5 annual yield, then use those same tokens as collateral to borrow stablecoins for other investments. What makes this revolutionary is that traditional money market funds don't let you borrow against them. But tokenized securities, the kind Ondo creates, actually unlocks new capital efficiency. Institutions can earn yield on safe treasury exposure while simultaneously using the same value as collateral for other investments. This is why traditional banks are paying attention. Ondo isn't just replicating the traditional products on the blockchain, they're creating fundamentally new financial instruments with capabilities that did not exist before. While other tokenization platforms are still trying to figure out basic custody, Ondo is investing their funds reserves into yield-bearing stablecoins. They just invested 25 million of OUSG reserves into YLDS. Figures yield generating stablecoin. This is not speculation anymore. This is their own funds money being diversified into other yield generating products on their platform. Here's why it matters. Typically, you get slightly higher yields than straight treasury bills because it combines multiple money market instruments. By including the OUSG's reserves, Ondo is creating a multi-layer yield structure where funds' underlying assets can generate additional returns. This is the kind of sophistication you see at the institutional level. Traditional money market funds generally can't invest in other funds, but tokenized products can create complex yield strategies while maintaining that instant liquidity. In 2025, the SEC concluded its investigation into Ondo Finance's tokenized security offerings. No charges, no settlement, just a clean close to the investigation. This is massive, while other tokenized projects live in a regulatory limbo. Ondo has regulatory clarity. The SEC looked at their products, custody arrangements, their investor protections, and said nothing was wrong here. Now, what does this mean for institutional adoption? It means that when a pension fund's compliance team asks, "Is this legal?" Ondo can say they've been investigated by the SEC and have emerged clean. That kind of risk, that kind of risk mitigation that opens doors to billions of institutional capital. The competitors, they're still waiting for regulatory approval or hoping the SEC won't come knocking. Now, let me show you the technical moat that other platforms can't replicate. While competitors are arguing about which blockchain to use, Ondo built their own, Onchain. It's not just another blockchain. It's specifically designed for institutions. It's built on top of the Cosmos SDK base for speed, EVM compatibility for existing smart contracts, and custom modifications for regulatory compliance. But here's the genius part. Their products work with Ethereum, Solana, BNB, and Ripple's XRPL as well. They're not betting everything on one chain. They're enabling clients to use whatever infrastructure makes sense for their compliance requirements. What makes this technically superior is that institutions don't want to be locked into one blockchain network. They want options. Ondo provides multi-chain access while maintaining security, compliance standards through their own chain when needed. That's institutional grade flexibility. Here's how you know when real adoption has occurred. Copper, one of the largest institutional crypto custodians, added support for Ondo's OSG tokens. When institutional custody providers add support for new assets, it means clients are asking about it. These custodians aren't adding support for theoretical products. They're adding it because their institutional clients, like pension funds and insurance companies, corporate treasuries, are actually holding these tokenized securities and they need the proper custody solutions. The custody providers are the first to know when real institutional adoption is happening. You don't see them adding support for random DeFi yield farms, but they are adding support for Ondo's tokenized securities because real money is flowing in. The additional institutional custody support from Copper proves that real institutional clients are holding Ondo's tokenized products. Not just early adoption, but established usage. I hope that you enjoyed this session. and have a good evening.